AriasWave video, and we're looking at Bitcoin. Overnight we saw a pretty deep retracement back to the upside, but these patterns all indicate that looks like we potentially will turn around from this point. So in my last video I did mention the ABC scenario, and then I had to basically eventually go to sleep, as you do. Woke up and I had seen that basically a large thrust to the upside had occurred, which to me looked like the E wave, the completed correction of the wave 2. So if you want to understand that pattern again, it's basically the wave 1 ended here. We had an A, B, C, small d, and then the E thrust. The E thrust tagged the 0.618 retracement, created an impulsive move to the downside in a wave 1, I believe. Right, I'll just go to the smaller degree. So I believe it created a wave 1 followed by an A, B, C, D, E pattern. And now we are moving to the downside. Stops could be moved lower if you want to. It's optional. You could also add to your position. That's just my opinion though. I find it interesting to do so. If you got in at the highs, you kind of lower your stop and increase your position in a way that, you know, you kind of saying, well, I understand the pattern, and if it does something that I don't understand, then I don't want to be in the trade anyway. So I kind of see it that way. At this point though, it looks pretty clear though. The pattern is pretty clear with the A, expanded B to the downside. C, very weird looking C again. Once again, when you get the moves that are hesitant, they chop out. The moves that are, definitely something decisive, they seem to break pretty hard, but then bouncing back up, a bit hesitant, and then once again decisive. So I find that interesting, even though this is not a zigzag. But if you're an Elliotician, you probably do think that there's a good chance that this is a zigzag pattern. So it's funny because you wouldn't be wrong if you traded it to the downside. But it's funny because in identifying the pattern itself, it's not a zigzag. It's a CDE pattern. Okay. Unfortunately, the waves are not that simple, but if you think they are, that's great. Whatever works for you. The way that I see it, based on AriasWave, is basically took me a number of years to develop. You can learn it for free. Check the description. There's just a little bit of a catch if you want to learn it for free. So just check that out at the website. No big deal. You're still trading your own money, doing your own thing, but you get to learn what makes this type of analysis very interesting, because it allows you to make certain moves, understand certain price action, and re-entry into the market could be a good idea right now if you haven't got in. I might post a chart about that soon. So just a quick update. That's what I see happening here. Usually when you get a pullback like this, it's better that it's fast and sharp. Usually it's the slow, grindy retracements that end up turning into something different. The quick tags of these retracements are usually the rejection of higher prices and the end of a corrective pattern. So hopefully you've enjoyed this one. I'll catch you later on again on the next one. Thanks, bye.